Welcome back. You're still with us on Markets Today. Now let's go over through the rest of the headlines that we're tracking for you. The fourth headline is, we learn from sources that Tata Asset Management Company is set to acquire a significant stake in UTI Mutual Fund. As of March end, Tata AMC and UTI Mutual Fund have assets under management worth 85,000 crore and over 1.6 lakh crore rupees respectively. Once the deal is through, it would make the combined entity the sixth largest asset management company. Let's now move on to a CNBC TV18 exclusive. We learned from sources that Standard Life is likely to have sold 1.3 crore shares of HDFC AMC in a block deal. The stock ended with a gain of 12%. Yash is here with the details. Yash?
Well, HDFC AMC was a stock which saw a strong run-up in today's trading session, and that strong run-up was largely on the back of that block deal which took place today morning in HDFC AMC. Sources tell CNBC TV18 that Standard Life, which is the foreign partner to HDFC AMC, is likely to have sold about 1.3 crore shares, which translates to about 6% equity in HDFC AMC. Now, this particular block deal happened at an average price of 1,950 rupees per share, and Standard Life is likely to have raised approximately 2,527 crore rupees when it comes to sale of this 6% equity in HDFC AMC. On the buyer side, we've been given to understand that there were multiple funds, both domestic as well as foreign, who are likely to be the buyers in this particular block deal. Speaking about the residual stake of Standard Life as on June quarter held about 16% stake in HDFC AMC. They've sold 6% equity. They are still left with about 10% stake in the company, but the stock today took positives from the fact that a part of that selling overhang is now out of the way.
Thank you very much for that, Yash. The big newsmaker this evening, the chairman of HDFC, Deepak Parekh, says he's never been more bullish on India as he is today. Speaking exclusively to CNBC TV18, Deepak Parekh said India has become a pivot for global growth and expects double-digit GDP growth over the next decade.
In my 50 years of working life in India, I have never been as optimistic about the future potential of our country as I am today. We have been saying this for a while, that the optimism around India's growth potential is well within our grasp. The pivot of future global growth has clearly shifted to Asia. And for India, one is seeing trends of transformation at a very large scale. We, as you know, are one of the largest countries in Asia if you take China out. So over the past 15 years, more than 300 million Indians have been lifted out of poverty. India's current per capita is around $2,300. So the gap seems large right now to attain developed country status. But we are talking 25 years from now. Again, if you look at it from another perspective, we are already contributing 14% of global growth. 14%, which is high, increasing year by year, and is already the second most important driver of global growth after China. And seeing what is happening in China, we will probably in the next few years be the highest growth country in the world. So we can very well aspire to a double-digit GDP growth path into the next decade.
Okay, this is the fifth headline now for the day. Muthoot Finance fell over 12% after the company saw its loan growth dip and the net interest margins come in at a 22-quarter low in Q1. Abhishek is here with the details.
Well, to begin with, it looks like the market is shifting in terms of gold financing from NBFCs to banks, as we covered in FinStreet. So for Muthoot Finance, the earnings are below estimates. Gold tonnage is down about close to 5% quarter on quarter. The net interest margin is at 22-quarter low of 12.2% when compared to 13.74% in the previous quarter. AUM growth is on the weaker side. YOY, it's the weakest growth in 17 quarters, coming in at 7.7%. and sequentially is the weakest in 25 quarters, wherein the AUM has declined by 2.3% quarter on quarter. Return ratios are also very poor in terms of historical performance. ROA is the lowest in last 20 quarters, coming in at 5.6%, and ROE is the lowest in last 22 quarters, coming in at 17.5%. Both in terms of NII and PAT, they are below our poll, and their subsidiary, both the housing finance as well as the Belstar MFI, both saw massive deterioration in their asset quality as well. Back to you.
Abhishek, thank you very much for that. Another big mover today was DFM Foods, and this is a CNBC TV 18 news break confirmed. DFM Foods has announced that the company will delist from the exchanges. The stock soared 20%. Nisha is standing by with the details on this story. Nisha.
That's right. DFM Foods has not performed very well. In fact, after Advent International had bought this company in the year 2019 at 249 rupees 50 paise per share, the company has not given returns for the private equity owner of the company. And therefore, Advent International, in order to have more flexibility in terms of a big strategic overhaul to improve the performance, also to infuse more funds, give an exit to the equity shareholders, as well as also to reduce the compliance costs for the company as a listed entity, has taken this big call of delisting DFM Foods. And they have also specified that PAC, another probably fund of this particular firm, is going to act in concert in the delisting exercise, and it will be done through a reverse book building process once the floor price is fixed. So we broke this story earlier in March this year, and now it has been confirmed that DFM Foods is on the path to a delisting process.
Nisha, thank you very much for that. Another stock that we were tracking today was Apollo Tyres. The stock gained 6%, though the earnings were a mixed bag. Sonia is here with the key highlights. Sonia.
So it was a mixed bag for Apollo Tyres this quarter around. The revenue growth was very strong, in excess of 30%. And both the segments, Asia Pacific as well as the Europe region, had a good growth, especially the Asia Pacific region, which saw a 36% growth on the top line. However, the margin pressures definitely persist. The margins were down 70 basis points year on year, coming in at 11.6%. That's because of higher raw material costs, higher crude costs, rubber prices, which hit the margins this time around. However, the management does believe that perhaps the worst of the margin pressures now behind them. Overall, profit growth was almost 50%, and strong top-line growth is what kept the stock very active today.
Sonia, thank you for those highlights. Moving on, Fairfax-backed Go Digit Insurance is ready to make its Dalal Street debut. Sources tell CNBC TV 18 the company is likely to file its draft red herring prospectus this week and will raise close to 5,000 crore rupees via a fresh issue and an offer for sale. Yash is here with the details. Yash.
Well, that is correct. Go Digit General Insurance has filed its IPO DRHP with market regulator SEBI, and it's after 5 years that a general insurance company is planning to come out with its IPO. The last time it happened was in 2017 when New India Assurance as well as ICICI Lombard launched their IPOs, and after that it's straight 2022 when Go Digit General Insurance is planning to do the same thing. As far as the IPO itself is concerned, it's a large issue. Sources tell us that the total size of Go Digit's IPO could be around 5,000 crore rupees, out of which about 1,250 crore rupees would be fresh issue, which means those funds will come into the company, and the balance 3,750 crore rupees would be the offer for sale, the money that would be taken out by the selling shareholders. As far as valuations are concerned, sources tell us that the IPO is expected to value Go Digit General Insurance at about 30,000 to 35,000 crore rupees. Compare that to some of the listed players. For ICICI Lombard, the market cap currently is about 62,750 crore rupees. For New India Assurance, the market cap is about 14,593 crore rupees. To that, Go Digit will have a valuation of about 30 to 35,000 crore rupees.
Yash, thank you for those highlights. Moving on, Reliance Industries has emerged as the second largest private employer in the country, with the workforce exceeded by only tech giant TCS. Sonal is here standing by to give us more details.
Thanks a lot for that. Well, Reliance Industries has emerged as the second largest private employer as per the recent data. Now, the company has taken over IT major Infosys, TCS especially, and also majors like Coal India and SBI. So it's still below TCS as we speak. Total employee count stood at 3.42 lakh, and which is a growth of 45% if we compare it to March 2021. So just taking a look at some of the top companies and the IT sector that contributes the most to the list. Understandably so, right? And retail segment for the company is the real driver for the growth in employee number, with 2.15 lakh employees approximately at that number, followed by Jio at 83,000 and then followed by the parent Reliance Industries. Reliance Retail now accounts for 63% of the total workforce at the group. Quickly looking at how employee numbers, they have constantly been increasing for the company. Even in a pandemic year, from 1.9 lakh employees somewhere around 2019 and continued by 2020, it has continuously been increasing, and now it stands at 3.42 lakh employees. That's the approximate number. Talking about female participation, that's a big focus for the company. In total, there are 63,167 women employees, and retail again is the biggest contributor here, which is followed by Jio and then the parent, that is Reliance Industries. Females as a percentage of total employees stand at 18.5%, which is largely in line with the industry. As you can see on your screen, since Reliance Industry is a conglomerate with diversified businesses catering to both manufacturing and retail sector.
Sonal, thank you very much for that. And with that, it's a wrap on this edition of Markets Today. Thank you for watching.